Well, Deutsche Bank once again. Deutsche Bank. Man, I cannot get enough of Deutsche Bank. Mainstream media site in the UK, the Express website, express.co.uk. Deutsche Bank admits it is preparing for market crash as fears over bailout grow. Germany's largest bank has admitted it is in financial repression mode as it desperately scrambles to implement financial buffers to prevent collapse. Central banks are using interest rate cuts, asset purchases, and other monetary policies or policy measures to prop up the economy to keep it at a status quo, the bank said. But a market correction could be on the cards if an external economic shock hits, they said. The news comes as it was revealed the bank's profits dropped by 98% last month, and its share price reached lows not seen since before 2002. Now Dominic Konstam, Deutsche Bank's global head of interest rates research, has issued a report that warned a, quote, collapse in risk assets, end quote, could cause panic. And he said the bank is awaiting decisions from the ECB to bail out Italy and Japan's proposed helicopter money investment similar to that of quantitative easing in order to fully understand what happens next. So Mr. Konstam said, quote, the status quo could continue for several years yet if nothing breaks in the system. There are ways, of course, for either avoiding breaks or at least patching them. Mitigating the impact of negative rates on banks is now in vogue with subsidized bank loans for on lending. Quote, we may yet see soft forms of bank bailout still being allowed. The conclusion is that without an external economic shock, it is hard to see policymakers being prepared to take dramatic fiscal action to jumpstart the global economy and bounce it out of a financial repression. Repression? How about recession? Or depression, but not repression? The hell is this? Ironically, the shock that is needed would require a collapse in risk assets, such as, let me guess, derivatives, if I had to take a wild guess, for policymakers to then really panic and attempt dramatic fiscal stimulus, end quote. Deutsche Bank has been calling for aggressive fiscal policy, including government spending to build infrastructure to aid jobs growth in recent weeks. But Mr. Konstam added, quote, despite optimism around this in early July, we have not exactly had the green light on either helicopter money in Japan or Italian bank bailout. Policymakers aren't used to dealing with financial repression, and that unfortunately is one of the defining characteristics of stagnation. In July, the bank's CEO, John Cryan, says the bank is preparing for restructuring amid concerns with its assets. He said if the current weak economic environment persists, we will need to be yet more ambitious in the timing and intensity of our restructuring. I already covered that one. More ambitious. How do you become more, listen, you're in a giant hole in the ground. It's made of pure slick metal. There's no ladders. There's no nothing. It's 100 feet tall or 100 feet deep. You've got to climb 100 feet out, and it's a pure cylinder. And it's you and one other person in there. You pretty much can look at each other and say, well, we're going to die here. We can't get out. There's nothing here. It's a cylinder. It's very shiny and slick. Can't climb it. There's nothing to put up here. We can't get on each other's shoulders. That's a we're now 12 feet tall. No, I mean, that's it. We got to go 100 feet. We're dead. But if you're old John Cryan, you would say, we need to be yet more ambitious in the timing and intensity of our restructuring our situation down here. Because if we restructure things, we got to be real ambitious if it gets worse, by the way. But right now, we're just going to restructure a little bit. If things get worse down here, we'll let you guys know, and we'll get a bit more ambitious with our restructuring program. Thank you. And everyone's going to say, what the hell could they possibly... What are they restructuring? There's nothing down there. There's nothing but them and their clothes. What, are they going to take their shoes and stuff off and like move them around? What do you mean restructuring? What does it mean? There's nothing on the screen. What does it mean to play us out? Like to end the show. To attend up. Go. John Cryan, what do you mean restructuring and be ambitious in the timing? What does that mean? There's nothing there. You got that right. There is nothing there. Broken promises, empty words, etc. He's essentially saying, if this big, again, unexpected, unforeseen, epic event happens, it could cause panic with the politicians, who would then call for an absolutely epic, enormous bailout, again, of epic proportions. And, as I think about this, I can't help but thinking about Martin Armstrong's chart, where he showed, public debt builds up, and then private debt builds up, or maybe it's private first and public, and then it just explodes over the last part of the cycle, just insane levels. And I think we have one of those reached, now and now it's time for, I don't know if it was the private debt first, and now it's time for the public debt. I want to see if I can find that little chart real quick. Hang on. All right, so basically, I found a page on his economic model, Martin Armstrong's. It's called the Economic Confidence Model. I talked about this before. I've done about 3 or 4 videos now about Martin Armstrong and his models and what they show, and how literally 2016 all the way to 2032 is basically the deflation of real estate cycle. But he shows these charts. How long is this? It's like a 60-something year wave, 67 year something wave. 80 or 7, maybe it's 76. I'm trying to see if there is an exact date. But it basically goes from public debt to private, or not necessarily debt. I'm trying to read here. The flight to quality alternates depending who is in trouble. Government or public debt, or we'll just call it public, or the private sector known as private. The primary mistake many people make with the economic confidence model is assuming it should be a perfect model for the stock markets, gold, or some other market. It is a global model and does not track any individual market. It is tracking the phenomenon of international capital flows. There is a shift back and forth between public and private investment trends. Okay, so we're not talking debt. Trends. For example, the wave that peaked in 1929 was a private wave where people had great confidence in the private sector. When the crash came, we turned toward the government creating a more conservative wave of public investment where bonds do better than stocks. So what I'm seeing here, and I'll show you this picture. This is 1981 in the middle, and that was a public, investment trend that then went to the private sector. So 82, 83, 84, 1990, etc., all the way up to where we're still at. There's 2015 over here, there's 2020 down here, and then it, I guess, balloons, if you will, in 2032, 0.95, we'll just call that 2033, which should then crash down and switch back to public, and as you said, what happened in 1929 was a private wave where people had great confidence in the private sector, and when the crash came, we turned toward the government creating a more conservative wave. So if you're looking at this chart, it would be kind of like going back to, 1934, and then it builds up for, several decades. And then there's problems and markets crash and all kinds of issues happen. Bonds are bad, and then people say, well, we put our money into the private sector, and then the private sector builds up and it just repeats. So what's interesting for me right now is that this shows the year 2032. We're in the year 2016, as you know. So we're talking 16 more years till we get to 2032, which means the private sector is still where money's going to be going. So when I see, as Lindsey Williams said, market will just keep rallying. Bad news, market rallies. Good news, market rallies. These are, again, this is private stocks. We're not talking bonds and government treasuries and things. The stock market. So I'm just trying to wrap my head around people still investing in the private sector after a big crash, which we are expecting, soon, right? And if the club has been forecasting for us with their little secret ways that they do it, it's supposed to happen late this year. Let's say it's this year, next year, whatever. Just sometime soon it happens. I'm trying to wrap my head around, what about this chart? Because he's got a pretty amazing track record with looking at global, like I said, global movements of money, following it. It doesn't say 2016, 2017, 2018, or 2020, this big drop, climax and then drop off, and then we're back to the public investments. It appears to me that we're about to do that now. The crash is going to happen. Oh, there goes everything in the private industry. It's been destroyed. Everything's, financially destroyed. What's the safe haven? Go back to government bonds, right? They've already created these MIRA accounts, these IRA things. It's as if they're preparing, and I mentioned this before about that, like they're preparing for people to say, oh, we already got this ready for you. Yep, your markets are dying. Stock market's here. Put your money over here in the government. But if I'm to believe this chart, we're 16 years early. I think we're going to be 16 years early, so to speak. Because there's just too much debt in the world right now. And they're going to deal with this the way they want to. They want to usher in their new world order and their currency, and they want to do that. They can't wait 16 years for this to naturally happen. We're going to make it happen now. All right, there'll be some big event. I mean, look at the way things are going just in the world. So I see this, again, this chart, but I also see this little drop off. If you, let's go back to that. The year 2016, right? So this is 2015.75. Again, round off, it's 2016. And then it drops, it goes all the way down to 2020.05. We'll just call it January, obviously. January of 2020. 2016 peak, dropped to 2020. What was the last thing we saw when this happened? 2007 to 2011. If you recall, those were some pretty bad times. Markets, real estate even. That was, matter of fact, 2011 is about that year when it actually, real estate finally started to kind of barely start to turn around, and then it started climbing back up. So if you people bought in 2011, you probably bought at the right time, at least for houses in most areas, I should say. And here we are back to 2015.75. It's a peak. We've already seen at the end of 2015 and early 2016 horrible markets. And now, they're rallying again. I think it's fluff. It's an election year. And they want Hillary in there. So let's let my opinion, and I realize the Shemitah cycle thing and the Jubilee year, it ends September 23rd or thereabouts this year. Then we have October, and then we have November, and that's when we vote. So is the club going to hold the markets together until the vote happens? Hillary, you're in there, even though Donald Trump won. Polling data, phone app data, exit polls are showing Donald Trump destroyed you today. Doesn't matter. CNN play your news. Hillary won by 51-49. Right, so even with that nonsense, then let the markets crash because she's already in there. But historically, markets tend to crash around September, October. it remains to be seen if that happens. Because I'm telling you now, if that happens, Trump's already said it. There's big bubbles out there. They're getting ready to burst. He said it live on TV. So if he's saying that, he knows too. And if it happens, he wins. He's going to win. Of course, he's going to win anyways. But as far as the reality that the perception the club wants to put out there, they know if we could let the markets crash, he's going to win for sure. And then we're going to have even more trouble hiding the fact that we made Hillary win anyways. We don't need another thing, another thorn in our side on top of the other thorns in our side that prove he actually should have won. So I've been thinking about this lately, and I'm thinking we may not get a crash in September, October, or until November, until it happens, till the vote happens. She, of course, wins 51-49, and then it crashes, just like they did with Obama. However, if you go back to Obama, 2008, the crash happened before November when he was voted in, right? And, of course, his whole part of his campaign trail, we got to fix these, the bankers. We can't allow them. We're going to tighten regulations. Please. So it may go the same way. But I think if it does, that's just going to be more firepower for Donald Trump. But anyways, take care.